Hello, and welcome to another episode of the Seasonal Tokens Podcast, where Polar interviews people so you can do more investing and less gambling.
Hello everyone, it is Polar here, the CMO of Seasonal Tokens. Welcome on another episode of the Seasonal Tokens. And today we have another special guest. We have Jeff Hancock from Coinpass. So welcome, Jeff.
Thank you for inviting, Paula. Really good to be here. Always wanted to chat more crypto with more people out there that want to get more involved in the crypto space, learn, educate themselves, and get confidence. So thank you for the invite.
Perfect. Thank you very much. I'm looking for guests like you for sure. So let's start the conversation with the first standard question, if I can call it this way. So can you introduce yourself and your background with a few words?
Sure. So my name is Jeff. I'm a crypto addict, just like everyone else listening to this right now. I first got involved in crypto very lightly back in 2014. My background is I'm an engineer. I was a technical engineer for about 15 years in hotels, casinos, data centers, and eventually hedge funds. I've had a project to help a client. They had to do a deal in Bitcoin. I had to learn Bitcoin over a weekend. I never really took it seriously in 2014. I peeled the Band-Aid off pretty savagely in 2017 when the market got really interesting and I'd lost access to a wallet with close to 70, maybe 75 Bitcoin in it. Wow. I can still tell you where that Bitcoin address is, unfortunately. I was doing property at the time. I was still doing engineering, but in a contracting role with a very large hedge fund in Mayfair in London. And a consulting business. So I just kind of had my fingers in a few different pots. Really enjoyed it, really loved the hustle. And then when two of my now co-founders came to me, they knew I was doing crypto and I was making content online. I was consulting people over Facebook and Instagram and all that kind of good stuff back in the day. And they wanted to take a very large position in Bitcoin in pound sterling. And they weren't able to do it in a very scalable way. Retail crypto in the UK was still very immature and very small back in 2017, 2016. And you had to send your pounds into Europe, into Lithuania, into Latvia. There was no UK banking support. The majority of the liquidity was in euros and US dollars. And they wanted to make, like a 50 or 100,000 pound investment without any FX exposure. And I basically said, you can't do it. You may as well just swap to USD, swap to Euro and get on with it. And then they said, why not? And that was, I thought, an opportunity. I opened my big mouth. I said, why don't we build our own? And 4.5 years on, here we are.
Amazing. Yeah, so all the pieces of the puzzle stick together.
Something like that, yeah. So I came up with the idea, let's have an on-ramp, off-ramp. Let's just make it really simple. Let's try and sell one Bitcoin to one person. So we put our own money in. We were thinking about doing an ICO because it was very ICO mania. The ICO bubble hadn't quite popped just yet. We decided not to do that because we wanted to go for a full kind of FCA license in the future. There was no regulations back in 2017 whatsoever, but we could always see you can't regulate blockchain, but you can regulate gateway companies like ours. So let's pretend like we're a regulated business right now. Let's pretend that we have a compliancy structure we have to follow. And then when that regulation and registration finally came along, we didn't have to change our business at all. Whereas a lot of other companies have been decimated out of the UK because they just weren't prepared. So we took that edge very, very early. It was just a simple from your bank into crypto in a few minutes, which no one else could really do. Even Coinbase struggled a little bit back in the early days. And it wasn't until about 2020 until we went to a full feature trading exchange, limit orders, market stops, all that kind of tricky stuff, because we thought there were enough exchanges out there. But when you have thousands of people ask you for the same thing, you have to go and build it. So that's why now we're one of the largest kind of full feature crypto exchanges that are exclusively a UK company. There are a lot of other subsidiaries of other companies here in the UK that have the same license as us, but they can't do the same kind of banking that we do. And that's what kind of sets us apart as a UK-based crypto exchange.
Really nice. Yeah, I have prepared some questions related to your company because I'm really interested to find out more about it. And I'm sure that our listeners will also be very interested to find out about your company and its differences with other crypto exchanges. But before that, I'm not sure that I was able to fully understand what has actually attracted you to the crypto world.
Well, I think it was, when you peel it back and you start to really focus on what crypto is and what does it solve. It solves a massive inequality and inefficiency with the existing financial system. I think people that really take this stuff seriously and not just kind of, not memeing about, I'm in it for the tech. A lot of these people are in it to get rich quick because the markets are volatile. But then you start peeling it back and get a bit macro on what crypto can do and what it does do. It represents the hardest form of money, which is Bitcoin. It's a fixed value. It's completely transparent. It's not run by anybody. It's stood the test of time. It's got 10 years of market experience and market exposure. And there's some really, really smart people that are a lot smarter than me. Look at it from a financial aspect, is that the crypto markets are volatile because all the other markets move far too slow. The property market, if you compress it down to, very, very small time periods, the property market is just as volatile. It's just a lot slower. It takes a very long time to sell a property. It takes a very long time to sell a business because they're two very illiquid markets. As soon as you add, instant settlements and the ability to move capital and move source of value and move, have a truly open financial system, then a lot of markets would look exactly like crypto. Investing into, if you're a UK listener, investing into your ISA, your tax efficient investment account, or into your pension account. Those trades take 4 days to settle. I'd moved 30K around my pension 2 weekends ago. And I was amazed that by, I did it on a Saturday, which is fine. It's a weekend. But those trades didn't clear till like Friday morning the following week, because that's just how long it takes in those kind of worlds, which is kind of crazy. Like, it's only 30K and it's moving it out of one fund and into an index. Like, it's not rocket science. Why does an investment manager need to approve that? Why can't it be automated? Why can't it be automatically matched? And it just shows how archaic and how many middlemen are still in this financial system. And as I've probably learned more about finance in the last 5 years because of crypto, because of blockchain, because of what is actually possible, but there is more market forces moving against this technical innovation. And it will continue to kind of lock people away from their financial freedom for a very long time until it's more mainstream. But the people that are taking the time to educate themselves now and actually get involved, even with £100, are going to set themselves apart over the next 5 to 10 years. And I'm 100% bullish on that, no matter what the market price is.
Yeah, absolutely. Definitely agree with you about this one. So you're telling me that you are in crypto not because you want to become rich?
Well, I think everyone wants to be rich. I mean, it depends on what your relationship to money is. So I like to peel back, do you want to get rich? Well, yes. Well, how do you want to do it? You need to educate yourself on something. You could be the best marketer in the world and have a lot of really good clients that will pay you handsomely, but you're providing a service. It doesn't really matter what you do. If you can provide value and educate yourself, you will set yourself apart. Now, crypto is just a vehicle to do that. People that are smart, people that, grind away and look for those, really small cap tokens that do well, people that got in and out of the NFT craze at the right time, those are people that applied themselves and really got deep into their education, into their research. And I think that's true across whatever you decide to do, whether it's crypto or not. There's just, there's only a fixed amount of time we have on this planet. And in that fixed amount of time, if you can do something faster than slower, then why not? I'm still taking a very long-term approach. My portfolio is very simple. It's very Bitcoin and ETH heavy. And then secondary to that is staking and market making. My time is very fixed. I do like to take time off, even though I'm always thinking about the next idea or the next business or the next, who I can help. And there are a lot of industries right now trying to get involved in crypto and using our platform for that very thing. Law firms, property companies, accountants, auditors, all of them are looking at crypto for something, even if it's just collecting their fees, because they've got crypto clients which want to pay for their fees in crypto, versus trying to do anything really crazy. We're still very early days, but there is so much attention around what this industry can do versus what it can't do. And that's what I like about it. There's always a glass half full approach no matter what.
Yeah. That's really nice what you're saying. And I'm really happy you're sharing with me that there are companies that are constantly looking for solutions for their clients to provide them the opportunity to pay with crypto. I think that all of us that are in crypto right now we are all looking for this to happen as soon as possible.
Yeah.
So it's great that it's already happening. So what does it mean to be a co-founder and a CEO of a crypto exchange?
They're very time consuming, very stressful. I think especially being CEO, you just get bad news all the time. You're always solving problems. You're always dealing with different headaches, whether it's a technical issue and you're rallying the team, trying to promote a healthy company culture. Being a remote only company is very tough. You have to basically pull people through the screen and wanting to engage first and then kind of engage in that culture second. And everyone's different is what I've found. I am a very extroverted, Australian, and I'm not loud in my opinions, but I definitely like to have a conversation and have a good time and educate people as well as help them. But some people just want to be left alone and code cool stuff. And that's what I can relate to my old engineering background. I used to do projects all over the UK and all over the world. And sometimes you just want to be left alone in your corner to go and build the best product you can or the best solution possible. And I think the people side of it is a very, very important side of any business, whether you're a solopreneur trying to build out your team, whether you're a scale up and trying to delegate and get more of your time back for the key decisions and relying on a team. And you need to always be leveling up in all different aspects. And there are some weeks where I don't look at a crypto chart at all, or don't deal with a single transaction, or it's all client based for a very long period of time. And I don't hear about what the tech team's doing. I don't hear about what the marketing team's doing. And I suppose being a culture leader as well as a company leader, you have to be able to step back and focus on the big stuff, on the macro stuff for a little bit, instead of maybe doing what you like to do, which I'm a very detail-oriented person. That's just my engineering background. I love getting into the weeds and solving really complex problems, but you don't always have time for that. So you never build a business for yourself, because that's just a job, and you can get a job anywhere, especially if you're talented enough. Peeling back and making it about other people, our users. Our platform is all about our users, solving their problems, getting in and out of the markets, having a reliable way to take their profits back to their bank account, which has been a massive, massive plaguing problem for a very long time. And focusing on them, focusing on other people is how I can mentally rally myself to get through each day and each week. Even if it's mentally draining, it doesn't matter. It's not about me.
Yeah, I think that we would live in a very different crypto world if all exchanges have been thinking the way you think, that they have to be oriented to the users.
I mean, if you think about it really plainly, they're the ones that are paying the small commission fees that we make our revenue on. We don't make revenue on subscriptions. We don't make revenue on the retainer basis and stuff like that. We only get paid when people get exactly what they want at the speed that they demand it. And I think in a world now that's very instantaneous, that's very delayed gratification, if people don't get their solution sorted very, very quickly, they'll simply go somewhere else. And that's just the name of the game.
Absolutely, yeah.
And I think that's what all industries eventually go to, whether it's zero fees or you just pay a spread, or you want your food delivered to your door, you don't want to wait. Back in the day, going for a 30-minute walk or driving out to pick something up was very, very normal. And then you could get it delivered to your door. And now it's delivered to your door within under an hour or under 40 minutes or under 20 minutes. There's this instantaneous culture that's just kind of taken on the last kind of 5-10 years. It's very, very hard to break. And if you're not meeting the mark, you'll get left behind. So it's very, very competitive, but also really enjoyable when you do get it right.
Yeah, absolutely. I think that people have started to have troubles with patience. Everything has to happen in the second. And if this is not happening, you're going to have a lot of troubles if you are delivering service definitely. That. So with over 100 exchanges, if the data on CoinMarketCap is correct, of course, what are the main differences between CoinPass and the most other exchanges?
Yeah, really, really good question. And even some of our USPs might not be, useful to a lot of people, and that's fine. We try to cater as many groups as we can. But the users we tend to, make the happiest are the people that are focusing not just on their entry and getting the latest token and getting whatever, but focusing on their overall strategy and their exit as well. So getting capital from a UK bank account, or even a Europe, we do euros as well, so UK and Europe, getting from their bank account into crypto and also back out. The exit is just as important as the entry. Some people are very happy to jump between their Barclays and their Revolut and deposit over here, but they are creating a very heavy digital footprint that will most likely come back to bite them in the long run. And also depositing with cards on other platforms are very, very expensive. It might not seem like a lot, paying 1.5% or 2%, but that affects your overall entry price. And some people are so focused on the lowest fees possible. I think Binance charges either free for certain tokens and 10 bips or 0.1% for others. But if you're paying 2% on your debit card to get in, and your bank will most likely see that transaction and flag it for later, you're causing a lot of problems in getting back out of the market when you finally want to cash those profits. In a perfect world, once you go into crypto, you can stay there, but there's still a lot of work to do on the payment side in terms of crypto as well. So the people that we tend to attract are investing anywhere from kind of 500 up to 50,000. They're getting in and out of those from their bank into crypto or crypto back into their bank within a couple of minutes. We deal with a lot of businesses because we do business accounts. So your property investors, your consultants, people that have a limited company, as well as their own name, can have 2 accounts on our platform. They find that very useful because they don't have to take funds out of their company and into their own name as income or as revenue or dividends or whatever. They can invest directly with their limited company, which is perfect for them. And then it comes down to support as well. We're a team of people. Try to put humans back into crypto. There's too many bots. There's too many auto answering services. Refer to an FAQ, you get stuck in a queue for days on end. We take a lot of pride in being a service-based business, and that's a lot of my experience was always service-based. Not tech support, but obviously tech teams supporting our clients. Getting a very simple answer back to someone as fast as possible can build a lot of trust. So while I say we're in the crypto business, we're also in the trust business. You have to sign up an account, you have to do a KYC and then make a deposit. That's 3 levels of trust we have to build with someone before our company makes any money whatsoever. So on that trust part is definitely knowing that there's someone here to support them, someone here to answer their question, and obviously that we have their best interest in mind. We don't report any data to the HMRC. We don't report data back to, other agencies unless it's maybe the Met Police on a specific, crime case or something like that. But we protect our users, and we, are always going to battle for them to provide the best service and the best product that we can. And I think that's what definitely sets us apart.
Really nice. Really nice. Yeah. All the things that you mentioned are really important in the current situation with crypto. I think that if crypto exchanges can make the life of potential investors easier, this can make the goal of crypto becoming mainstream much, much easier.
And I think even with mainstream banks as well as the neobanks and the digital only ones, there's still a very heavy emphasis on the user doing all the work before we can get to somebody. I know Revolut is a great little payments app, and I use it when I'm traveling. But if you get locked out of your account for any reason, it is exceptionally hard to even open a support ticket. You can only open a ticket within the app. You can only log into the app once you get your authentication done. And I didn't use the account for close to 4 years because I was in London under COVID and I couldn't get back to Australia. And obviously had to re-download it. My card was expired and I'd already chopped that card up because it was expired for 2 years. So why do I need it? And I didn't have some of this relevant information to just get back into my own account. And I was at a point where I was like, I may as well just, if I can't get back in and I can't raise a support ticket, I can't do anything, I may as well just go somewhere else. And I think I actually went through the business support to get something reset on my retail individual account. It was that bad, purely from inactivity. There were still balances on my account as well. So I have no idea why it's so difficult to raise a support ticket to get a basic amount of help. I'm happy to do the KYC again. I'm happy to provide the right information. But the fact that I was just kind of in this constant loop of, I don't have the card, I haven't used it in a while, I can't remember the PIN, that blocker essentially stopped me from using the service. And I think that was a really, really poor customer experience. And I think, the normal banking apps can take a page out of crypto's book on what we're doing, because everything is instantaneous, because everything on the blockchain is transparent. I don't have to ask anyone, where's that £5 of Bitcoin that I sent, because I can see it in real time. And that's just something that's missing from the existing traditional finance system, something they can learn from us, whether they like it or not.
Yeah, absolutely. I can definitely relate to what you're saying with Revolut. I have had similar issues before with something like that. So yeah, it's great that you are working on providing support that easy to customers. And I have had some issues with other exchanges regarding to the support. It has taken me a lot of efforts to just find a way to contact them. And after that, waiting for many, many days to receive an answer.
Yeah.
And sometimes it has been a case with a serious amount of money, at least for me.
Yeah, it's probably just the thing. A significant amount of money to one person is an insignificant amount to another. And when you're dealing with millions or, tens of millions of users, unfortunately, the premise will always go to whoever's spending the most at that amount of time. And support is not a revenue generating activity. Getting someone access to their account doesn't mean they're going to be adding more revenue to the bottom line. And I think from a growing business, when you have a small amount of users, they kind of become your marketing force, so you look after them like gold. We've got some of our users on our platform that have been with us since 2018, and some of them I know personally, a lot of them I don't. But anyone that's kind of come on and stuck with us a longer period of time, whether it's an unfortunate or fortunate, they get the same level of support as someone that's brand new. We don't put a preference on if they're a corporate user or if they're an individual. If they've got a question and we don't have an answer for it, or they're stuck into a loop that we're unaware of, or they simply have a client request. They've done a huge amount of volume and we have to do our own checks and balances because we're an FCA registered company. We try and make it as easy as possible and not use complicated language to get past those little problems as fast as possible. And you can't have a one-size solution for everybody, which is an approach that I've seen over and over and over again from people, is one size fits all. That's not the case. Everyone's different. Everyone's got their own financial matters. Everyone's got a different bank account. Everyone has maybe the same question worded a slightly different way. And you have to be able to respond to that and communicate with everyone. Because I think that's what we all want. We want a connection. We want to feel engaged. You feel disengaged with the brand, you will try something else. And that's just the nature of the world we live in right now.
Yeah, and I think that you're absolutely right that no matter how much money you have to be treated equally with everyone else.
And that's what crypto is about as well. Crypto is about financial inclusion. And that's something that I promote through our company culture. People are looking at crypto to invest because they've been ripped off somewhere else. They want something from themselves. They want to be self-sovereign. They want to do DeFi. There are so many reasons for everyone to get involved in crypto, and everyone's reasons are different. But what they're trying to achieve aligns with our company goals. So we treat them all exactly the same. Everyone's the same, whether £100 or 100K. They all deserve the same level of service because of what crypto stands for. Financial inclusion and financial freedom for everybody, treated as equals.
Yeah, even if they just want to become rich, right?
Like I said, there's nothing wrong with that. If that's what you want to do, that's what you want to achieve, go for it.
Absolutely.
Yeah.
And crypto gives you this opportunity, I'm sure about it. So if there is only one important thing that people should remember about Coinpass, what would it be?
Ooh, I haven't had that question before. That's really good. Well, one thing I want to remember, we're here to help.
Okay.
We're here to help, whether it's, we write a lot of stuff, we do a lot of social content. I love educating people. I love having great conversations about crypto. I love hearing people's stories. I think we're just here to help. I mean, you can buy a Bitcoin in any other way or form on kind of any platform these days, whether you want to hold it in your own wallet, you want to withdraw it, whether you want something that's a super sexy kind of UI, UX, you can buy it in a number of different apps, including Revolut that we mentioned as well. You might pay a lot for it, but you can get financial exposure and just trade the price. You can use it for payments if you want to pay. I've done payments with it because Barclays were too slow and an FX provider wanted way too much fees to send. I think I was sending like 5K back to Australia for a very stupid family related thing. We had to put a pool fence up the first time in 30 years at our farm. And my mum simply couldn't afford it. So I said, well, I'll pay for it because that's what you do to help family out. And it was ridiculous just to send 5K home. And this is back in 2015 or 16, I think it was. It was a while ago. And I could rely on the banks, I could rely on the payment stuff that was available at the time. And they were all garbage. But I could send that amount of capital to myself in 9 minutes and pay 20p in fees.
Yeah.
It's very hard for a lot of mainstream banks to compete with that. And I didn't break any laws. I didn't do any money laundering. I did all my checks and balances. And I've actually achieved exactly what I wanted to do. And I got to do it myself, which is obviously very gratifying at the same time, So I think what the biggest opportunity for crypto, whether it's get rich quick, whether it's diversify your portfolio, whether it's making yield and making income, is that you can take 100% control of your finances. And I think that's one thing that I think everyone should be aware of, especially in today's market. We've got inflation up to the eyeballs right now. Everyone's getting pinched. Price of fuel is up. Price of food is up. Price of living is up. And even with all those kind of market pressures, we see people still wanting to invest or still wanting to trade. And they'll, sacrifice other parts of their life to kind of keep doing that because they're not getting the returns they need out of the stock market. They're not getting the returns in their investment accounts that they used to get. So they're turning to crypto as an alternative. And simply getting a better service or getting a bit more back by taking more personal responsibility, which I think is awesome.
Yeah, and when you are saying all this, a question to my head appears do you think that crypto is actually a good solution for the inflation?
It depends. I mean, a lot of it's based on stablecoins, and the US dollar is on a bit of a tear right now. What date is it? Just so we're in relevance. We're in 12th of September, 2022. S&P 500 is down. Bitcoin had a big pump over the weekend. I just looking at our tweet schedule from last week, we're below 20K, and now we're back above 20K. We're at 22 or something like that. So it's been a very wild weekend. Can it go with inflation? I think over a longer period of time, yes. I think if you're going into an inflation-resistant kind of asset like Bitcoin, yeah, sure, it's volatile, it's down right now, but over the longer term, it's still up. If you were sitting in a very boring index, or you're not getting the returns in an ETF or a portfolio that's been designed for you, then yeah, Bitcoin will be winning over a longer period of time. But it's still not accepted mainstream as a stable investment. I've got a whole bunch of stocks in my SIP portfolio, and I've had 3 emails from Hargreaves Lansdown saying I should readdress the risk profile of my portfolio because there's a big chunk of MicroStrategy in there which is down, but I don't care. There's still some old leftover products that were Bitcoin trackers and Ethereum trackers from back in the day that you can't buy anymore, and there's no way I'll sell those. So there's still a very anti-mainstream against it. And I think if you're smart with your money, and like I say, your relationship to money is healthy, then I think you can ride out the dips and you can ride out the downtrends. Just don't get too greedy at the top, and take a very objective look at the market and what you're actually doing with your capital. If you're going out every week and going to the pub, that's something you can cut out. If you're, buying a lot of stuff, I've become very anti-material over the last kind of year or two. COVID helped a lot with that. But, I'm selling a lot of my stuff to beef out my portfolio while prices are down, and that's just how I'm dealing with inflation and dealing with cost of living and everything else. Crypto is providing a solution to that because my market making does the same thing it does every single week. I'll keep stacking into Bitcoin longer term because there's already a supply and demand problem. It's only going to get harder. So I kind of ignore the price charts a lot of the time to make my financial decisions because of how I'm involved and how I've educated myself over the longer term.
Okay, really, really nice. As an owner of an award-winning exchange, have you noticed any patterns in the way people invest in different crypto projects?
We're only listing the really, I suppose, top 50 coins right now. We're not kind of down into the 200s and 300s. So we do miss out on that kind of part of the market. But what we're finding is that when there is a significant market downturn, there are less panic sellers than there used to be. I think in 2010, we had that really, really big drop at the beginning of COVID. And there was a lot of panic selling then as kind of a preservation. And then people kind of came back to kind of buy into the bottom. We're kind of seeing a little bit less of that now. I think regardless of what Bitcoin's doing, regardless of what the volatility is, people are kind of buyers every other month. So they're dollar cost averaging in. We see a lot more dollar cost averaging and trend following than we used to. And I think that shows a bit of more market maturity. People educate themselves a bit more, kind of ignoring how volatile crypto is compared to other markets. And I think that's kind of part of people's edge. There's a bit more, not control's the wrong word, maybe a bit more predictability on what might happen with Bitcoin versus what might happen with pound versus dollar in Forex, because it's only technical. There's, I think, a lot more macro exposure with crypto and Bitcoin, and maybe people can ignore the volatility because there's a longer term trend they're investing into, or stuff that's happening with Ethereum. The merge is going to come. You can see exactly where it is, and there won't be any other surprises. That kind of stuff, that little bit of zhuzh in the market that has a bit of predictability. When there's big market crashes, like when Luna fell out, like when Celsius has fallen out, yeah, those were complete black swan events, but they don't happen every single week. So I think the more you get into this market, the more comfortable you can be. And I think that comfort helps a lot of people deal with their investment decisions versus a complete unknown. And I think the complete unknown scare people. And that's why we see more money coming into crypto now versus, I don't know how much is going to Forex, how much is going into traditional stock market. It will always be more for the next few years. But I think people's confidence in crypto is building, definitely.
Which is great. And I really love it.
Yeah, obviously.
Absolutely. So you said that you have been constantly investing in crypto for at least 5 years from what I have heard. So I'm sure that you have seen many different projects, you have seen many different investment strategies, and also different ICOs, IPOs, and things like that. So what do you think people should look for when they're searching for a project to invest in?
I definitely think understanding is the first bit. I mean, if there's a new project that's going to promise the world, there's already a problem. It's been tried before and it didn't work. There's a lot of failed projects people can learn from. A lot of stuff gets recycled over and over very quickly. And how quickly a token project can come to market now is way faster than it used to be. People were promoting is the wrong word, building an ICO almost like a miniature startup back in the day. There was a website, there was a white paper, there was a team, there was, a lot of tick boxes and checks and balances that people could do due diligence on to say, is this project going to work? Are they going to be able to build something? And getting into a token early had levels you can get into. But these days you see something pop up on Pancake Swap or BSC or whatever it's going to be very, very quickly with no team, no white paper, no documentation, with a very cool logo or cool landing page that might even be meme related. And we see hundreds of these, I was going to say a week, but I suppose almost a day now. I mean, very morbidly, the day that Queen Elizabeth passed away, over the weekend, there were like 100 tokens that came up straight away. A, in bad taste, but B, they don't do anything. They're just a meme. They're not to be invested into. So I think the speed of execution, the speed to market now promotes a lot of lazy investing. I remember seeing a tweet video the other week. I think it was about the Bitcoin conference coming up in Scotland in October. And someone was walking past saying, I lost all my money in X token. And his response was, you should have bought Bitcoin. It's still a bit of a get rich quick mentality where there's no research, just go into it. Someone at the pub told me to do it. I'm happy to gamble. And it's still considered a lot of gambling. And there's a lot of gamble tokens out there. But I think especially when they don't do anything, it's already preconceived that it's going to fail. The Squid token one was a very prime example. You can buy the token, but you can't sell it until we build the game. Okay, well, is that game ever going to get built, really? Squid Game was a really big phenomenon. It was huge on Netflix, but someone took a market opportunity. There were completely unknown people. And of course, it was going to get rug pulled. You could see that was going to happen. And unfortunately, people are still walking into these traps, which is really unfortunate. So that's why we always promote, education, get informed. And our main campaign right now is get crypto confident. Get confident in crypto. Do the simple stuff. A lot of NFT people knew nothing about Ethereum, but they were buying all of their NFTs with Ethereum. Didn't understand wallet security. So leaving a very, very large amount of liquidity on their MetaMask wallets with very exposed private keys. All of these hacks that we hear about are not hacks. They're social engineering. People getting encouraged to click a link that reveals their private key or have it very insecurely stored on their Google Drive or something like that. These are not hacks. These are very simple ways to lose very sensitive information. And this is stuff that's very, very simple to learn. It's not rocket science. But unfortunately, there's still a gambling aspect to some of these new tokens and these new investments that people keep falling into.
Absolutely. And what you're saying is a perfect fit to my next question that I'm asking all of my guests. And it is, how do you think a person can do more investing rather than gambling in crypto?
Take it slow to begin with. Be very methodical. Think about what you're buying and what your exit is. You don't have to think, I'm going to sell it when it gets to this price. Think about what you're going to do with that token. If you're just going to buy Bitcoin and sit on it, fine. There's nothing wrong with that. There's nothing wrong with being simple. There's nothing wrong with doing it easy. Do you want to leave it on an exchange because you want to trade it? Again, nothing wrong with that. Work with a trustworthy exchange. Do your research. Look at the ratings. Start off with 100 quid. You are not going to miss out in the matter of hours or days, or maybe even weeks, if you're doing something of a long-term strategy. If you're trying to get into a token sale very, very quickly, maybe ask yourself, why are you trying to get into it so quickly? Is it a fear of missing out, or you think it's a genuine opportunity? And just peeling back some of these layers of immediacy that crypto can offer people can usually lead you to a much clearer answer. I was invested really deeply into ICOs back in the day, no ifs or qualms, and I was just still starting out. I held something like 250 tokens at one stage. And the amount of Ethereum, I don't even want to know the amount of Ethereum I bought to cover all those gas fees back in the day. Like, there's probably a calculator somewhere I can go and do, but I'm not really interested in putting salt in that wound. And tracking those many tokens took so much of my time, and I think I was very lucky to get out at the end of the ICO boom with definitely not at the top. No one could have called that top, But I think I got out of the majority of those tokens with some sort of profit. And all of that profit went into starting Coinpass. I was one of the original liquidity providers for Bitcoin and Ethereum because I just put my entire portfolio into the platform. So I think, that immediacy, which probably isn't even a word, I apologize for that. That immediate effect of getting in now versus missing out is something that is probably the biggest thing people need to work on, I think.
Perfect. Really nice. And you have been investing so much time. I'm sure that you have tested different investment strategies. So is there one investment strategy that you have found that worked the most for you during all these years?
I'll say two. One's a very boring one. One's a little bit more advanced. Definitely very boring dollar cost averaging, buying 20 quid a week or something like that. 20 quid a Bitcoin or 20 quid a ETH or whatever it's going to be. Dollar cost averaging in, same as any other normal investment, takes a lot of stress out of it. I don't look at charts every single week unless I'm doing something different. Trend following, maybe not on the bot level and just putting all of that reliance on tech. You want to follow a 50-day moving average or a 200-day moving average, then that's fine. It's very technical, but you can make it simple. But then on the other side of my portfolio, as I call my alpha portfolio, where it's there to make yield. It's not there to make token capital value. Stuff like market making on the DeFi side. So, putting some USDC into a liquidity pool for swapping. There's more and more and more decentralized apps now relying on decentralized liquidity to make their application work. And the more of those that come out, the more reliance on that liquidity, the more trades that happen, and all of that's really healthy for the market. If I can leave an amount of USDC and USDT embedded into these liquidity pools, then I'm always going to get paid. So there's a number of really good DeFi apps out there. I won't recommend them here because they're borders on financial advice. But saying, could I put £500 into Bitcoin and wait, or could I put £500 into a DeFi pool and make a 6 or 7% return? Allocating funds into different areas of crypto is a very healthy way to be active in the space without being over leveraged. And I have different expectations for both of those portfolios. And I put a bit of time in kind of every week to kind of keep my eye on it and kind of see what's either new or underperforming or whatever. But the one thing I don't have to ever worry about is obviously the security of those tokens, because they're always in my possession. So I use my ledger. I have a number of Ledger Nano S's, and if I can't keep the token on there, is it something for me I want right now? Am I happy to leave that on an exchange? But there's a lot of really cool tech that's come out where using it's called Wallet Connect, and you can connect into DeFi protocols using a ledger instead of having to rely on. There's nothing wrong with MetaMask, but the way that you generate that wallet and then secure the keys can be a problem if people aren't really, really up on their laptop security and their other security protocols, etc. So, I have an expectation for each portfolio, whether it's very boring dollar cost averaging on Bitcoin and ETH, or if I'm doing something more active on the DeFi side. They have different expectations and different ways that I get paid. And I think that's probably how I would answer that.
Really nice, really nice. So right now we are in some sort of a bear market. So I suppose you're continuing doing dollar cost averaging and also yield generating. But if someone is just starting out and he doesn't have your experience, what you would advise him to do during these bear markets?
Podcasts, reading, and still being active. Just because prices are down doesn't mean, I think everyone can scrap together 100 quid to try something. And I think trying and doing is way better than theory. The theory of, I can go and do this and do that. And I would have made, I did in quotation marks, I realize I'm on video, but quotation marks, I would have made £1,000 there. You can't think like that. That's a fear of missing out. It'll lead to a poor decision in the future. Actually doing, even on a small scale, will prove a concept that you can get into the market, get out of the market, pay a few fees, and, not put too much emphasis on losing. Because if you do a small test now with £100 and you learn something, then that's the cheapest bit of education you'll ever get. Putting £1,000 in a project that gets rug pulled, or you lose your wallet, or whatever it's going to be, those are very, very expensive mistakes, which will kill your confidence. So I always think that, doing rather than talking about it is always going to be more profitable long term. Even when I've got a brand new wallet and I'm doing a very, very large transfer, whether it's for, something within our operations that I need to approve or moving capital between my own wallets, I still do a test transaction of a couple of quid and just pay the fee. Trying to save £1 on gas fees versus losing £1,000. pay the fee twice. It doesn't matter. And I think that I'm always still building up my own confidence, even though I've been doing this for a very long time now. Not the longest, definitely not, but there's always something to learn. And I think if you're constantly improving and constantly learning, then that's the way that you're going to succeed in this kind of market, being able to take the losses as well as the wins. And I kind of relate this a lot to one of my other pastimes, which is poker. I play a bit of online poker. I play a lot of live poker, but that's strategy. That's strategy and reading people and looking at the cards and doing the math. And you'll never be the best at it. I'll never be the best poker player. I'll never be world class, but there's always something to learn. And that's what I kind of like about it. It keeps my brain active, keeps the creativity active, and there's always some form of entertainment you can get from that as well. So I think being active and doing rather than just talking about it or reading about it, even in a bear market, is I think the best way to protect yourself long term. The best way to do something in a bear market instead of sitting around doing nothing and just looking at the charts thinking, what if?
Yeah, and hoping for the best.
Yeah, hoping for the best is not an investment strategy.
Yeah, but a lot of people are actually practicing it. So,
I mean, it's same as like, you get real deep on it. You get back to an emotional layer of investing because there is some emotion involved when you're doing this. No one's coming to help you and make the decision for you. You have to make that call, whether you want to put that £100 or that £1,000 or the whatever in. You want to mortgage your house and put it all on Bitcoin, then no one's going to tell you wrong. Your bank might have something to say about it, but you have to make that call yourself. And I kind of, if I have a problem making a decision, I will literally step back for 10 minutes, an hour, a day, and think about what the decision is and what it actually means. Am I FOMOing into this? Am I hoping it's going to go well? Or is there 1 or 2 or 5 outcomes that I'm completely prepared for? And it may be overthinking it a little bit, but one thing I can always say is I've been very confident in every move that I've made, whether they're winner or losers.
100% agree with you about this one. And one thing that I wanted to add to what you were just saying about the thing that it's better doing than just only reading and analyzing is that I'm also against practicing that much on demo accounts. For me, like I have noticed that there is a huge difference in trading in demo accounts to active real accounts. So like I totally agree with you that you have to do it in the real world, not in a playful area.
Yeah. It's same as a business. If you've got a business and it generates no revenue, is it because you're treating it like a hobby? If you put hobby amount of effort into it, you'll get hobby-based results. If you're treating it like a business and having a strategy, it's your capital that you're putting into it. And where did you get that capital from? From your time at your job, which you may or may not enjoy. But that capital is not going to grow itself, and no one else is coming to help you. So if you want to peel it back to a really, really raw layer, it comes down to that. You can practice as much as you want and build your confidence up, but you need to make a decision eventually. And you might decide it's not for you, and that's fine, but you've made a decision, and that's the best bit. Not doing and not deciding is effectively going backwards, in my mind.
Yeah, in my mind too. So it has been an amazing interview, and I'm really happy to have you here. But I think that we are close to 50 minutes or something like that.
Great.
And I'm trying to keep my podcast episode not that long, even though it's very, very hard, especially with guests like you.
Yeah.
So do you have any final words to our listeners?
Like our very simple marketing campaign, get crypto confident, surround yourself with the right media, surround yourself with a community, whether you know the people directly or it's in a Discord channel, and talk about it. Get involved. Don't treat it like a hobby. It's probably my best bit. And just, be active when others are inactive. Follow the Rockefeller Carnegie bit. There's blood in the streets. There's money to be made. Be greedy when others are fearful. Be fearful when others are greedy. And, try and split your emotions out from the most of it. Don't have a hope-based approach to investing and trading. Have a strategy and stick to it. And the strategy will play out to one of your goals, whether it's a winner or a loser. Just be prepared.
Perfect. Really, really nice. So thank you very much for being a guest, Jeff. It was an amazing pleasure to have you here. So after the recording is over, you can share with me all the links that you want to share with the listeners.
Just drop me an email. And when those tweets go out, just make sure you tag in our social media links, which I give you, and we'll echo those out as well.
Perfect. So thank you very much, Jeff. It was really great. So thank you very much to all that have listened to this episode and have reached to this part of it. It's an amazing pleasure to have you here. So if you enjoyed what you have heard, please make sure to subscribe and share the episode with your friends. I'm Paul, the CMO of Seasonal Tokens, and I'll talk to you on the next episode.